Yo, welcome to September 6th, 2024 live stream. Thank you guys so much for joining. Yesterday I was not streaming. I got back from a thrift store and I have been awake since 4 a.m. So I did not have the energy to stream yesterday, but I am back for another stream today. So coming into the morning, I do want to note that there is a larger, higher time frame SMT here between NQ and ES. NQ took out August 14th low, while ES didn't. So there's that larger time frame SMT. This daily BISI here is still getting respected. However, we did get respect, or we did get a we basically did give respect to this daily SIBI, and we traded lower, creating a newer lower low. So today it is the weekly close. So if we take in account the weekly power of 3 and take a look at the TGIF setup, where is prices residing in right now? The 0.2 to 0.3 of this weekly candle. Unless we get a massive expansion higher today, because that would be in confluence with the monthly candle. So this monthly candle here, this previous monthly candle, we have had a bullish monthly candle close. So this next monthly candle, I can anticipate for this next monthly candle to create a open, low, high, close. So if we are respecting the monthly time frame here, we should expand higher this week or the upcoming next week. But it depends on how we close here today, to be honest, because if we close below the weekly SIBI's consequent encroachment, then that wouldn't suggest to me lower prices. However, if we get a daily candle closure above this daily SIBI, then I would treat that as a bullish, a bullish argument, and that would, help us trade higher. However, we would need to have displacement. We need displacement above this swing high. We don't want to come up to that swing high, sweep that swing high, and then trade lower. And that would be shown on the lower time frames if we get candle closures, like a hourly candle closure above that swing high, and if we create like fair value gaps. So we are about to open here during the at New York, the New York opening bell in about 5 seconds. So if we do create this hourly SIBI or BISI, then we should treat it to continue higher. We should treat it as a support to continue higher here. So do we have any news at? We do not have any news at 9:30. We do have however, this guy speaking, FOMC member Waller speaking at 11, and it is a red folder news. And keep in mind, today is a NFP Friday. So what does ICT talk about? What is he? Essentially, what does he talk about? How NFP tends to be? He talks about how it tends to be really just highly manipulative. It's one of the two trading days where ICT doesn't like to trade during a month, NFP Thursday and NFP Friday. So just beware that today, even though it doesn't matter how clean the setups are, be cautious. Yeah, so we did create this 30-minute fair value gap here. So if price trades back inside this 30-minute fair value gap, I would like to see prices hold and respect the 30-minute fair value gap. I don't want to see prices close below the fair value gap if we're bullish. But yeah, we haven't taken out the data lows yet, and we didn't trade back into the higher time frame discount level here. So there I took the swing high or swing low here to the highest high during this price move up, and I basically just got OTE of the range and the discount level. So where do buyers want to buy? At the discount level. They want to be buying below premium. So we didn't get a retracement back into the equilibrium. We don't have to, but that was just one of my targets for the sell side delivery at least. And yeah, so I tend to wait till 10 o'clock. I let the first 30 minutes do its thing. I don't really like trading the first 30 minutes. So yeah, let's just watch price action. So here we're trading back inside that 30-minute fair value gap. And let's see what happens. So if we get a candle closure, a 30-minute candle closure below this this 30-minute fair value gap, then I would treat this as resistance. And if we get displacement on the downside, then once we retrace into that displacement, that FEG to the downside, that SIBI, if we get a reaction to a 15-minute SIBI, then I'll trade the internal model. That's the move I would take right there. This move, right? This little pullback to expand lower. But yeah, there's a lot of if-then statements. The way we can tell that this 30-minute fair value gap is getting respected is if we create bullish 15-minute candle closure. So this would be considered a bullish candle closure. But yeah, we took out, one thing I do want to note is that we did take out Asia's lows. Asia's highs has been taken. London highs has been taken, but oh, did we also take out London lows? We did take out London lows. So the previous two session liquidities have been taken already. So what we can anticipate coming into today is, poor price action, because previous day low was a draw. We took out previous day low. Asia's lows and London lows has already been taken, and Asia's highs and Asia's highs and London highs has been taken already. So unless we show really, unless we show clear distinction on where we're going to attack, higher or lower, I would probably just stay away from today. Once we take out, the daily objective, and we taken out both Asia's objectives, highs and lows, in both London's objective, highs and lows, then just tape read. No need to force anything here. But yeah, let's see if we can create a hourly fair value gap here on NQ. So usually during the open, to be honest, I've tend to notice how there's one. So if I open up the SMT chart right now, usually there will be one index that is trading opposite besides in between each other. So there's none of that right now. NQ is a little bit lethargic. YM's a lot stronger than NQ right now. But yeah, just wait for the first 30 minutes to pass here. This is the true opening range, so let's just watch that. And we actually did gap down from yesterday's closure. we filled that gap about 3/4. But it has been a interesting, very, very interesting week so far. Like, look at the price delivery here. Just on the hourly time frame, you can just tell how choppy it has been. That Wednesday and Thursday, it's super, super choppy. I mean, we're trading within, we're bouncing between two daily fair value gaps here. So we have a daily BISI and we have a daily SIBI. We're just bouncing between those two fair value gaps. Once we get a, clear, if we get a candle closure above this, then we're bullish. But if we get a candle close below this daily BISI, then we're bearish. But like I said, I'll let for more time to pass and just see clear price action. But yeah, just keep in mind that we are trading within a weekly fair value gap right now too. So if we get a weekly closure below this fair value gap, then I'll reassess my my draw. So yeah, NQ a lot relatively weaker compared to ES and YM here. We've traded past the consequent encroachment of the 30-minute fair value gap, and it looks like we won't we probably won't create a hourly fair value gap too. So just something I wanted to note. And we've yet to take out data lows. So this is actually NFP low here, and this is NFP high. So we've taken NFP high, but we've yet to take out NFP low. So that's just something that you want to keep in mind. Give me a second. I'm gonna do something real quick. Doom, 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 doom. Nationwide is on your side. All right, there we go. So let's pay attention to how this 4-hour and 8-hour candle is closing. So depending on how this 4-hour candle closes and how this 8-hour candle closes will tell me what will we do during this morning. Will we attack this 4-hour low, or will we attack this 4-hour high? Depending on how we close will tell me a little bit more, and depending on how we treat this 30-minute fair value gap as well. So data lows could be the draw of liquidity. Some people probably taking this move here, thinking that we'll probably attack data lows. I mean, it's not a bad sell here actually, but this isn't a part of my model. I like waiting for candle closures, and we still have 5 minutes left till the 15-minute closure, and I don't trade the first 30 minutes too. So yeah, if we do get lower prices here, I would consider targeting pre-market lows, data lows, and the higher time frame discount level, and August 30th or August 13th low. So I'll mark out pre-market lows here. low. I don't know why I keep saying lows. It's not, there's not multiple lows. It's just low. Yeah, so we're right as of right now, we are disrespecting this 30-minute fair value gap. We basically got a complete candle reversal here and didn't create that hourly fair value gap. So it would appear that we are probably going to continue lower here because we don't have any displacement to the upside as of right now. So for me, if we get a candle closure below this 30-minute fair value gap, if we get a 30-minute candle closure below this 30-minute BISI, then my morning objective would be to take out pre-market lows, the data low, higher time frame discount level, and possibly August 13th low. SMT here, actually between the markets. But yeah, you see how NQ is relatively weaker compared to YM and ES. There's always some sort of, like that first initial 30 minutes, there's always some sort of initial SMT between the markets. It's just so common. Something that I've picked up. So I'm actually preparing my other chart here right now, so bear with me. And let's see what the dollar is doing actually. The dollar is, well, we just got a really large expansion higher here. We didn't take out previous month's low. Interesting. So dollars expanding higher, whereas the indices are expanding, or ES is, or NQ at least is expanding lower. But we'll see. We still have 30 minutes, 15 minutes. Very interesting. Take a look at dollar. Barely missed previous month's low and previous week's low. And it appears that we are going to retrace back into this daily fair value gap on the dollar. Previous day high for me on the dollar would be the draw right now. If higher prices is seen on the dollar, we should be seeing lower prices on the indices. So I would wait, like I said, wait 15 more minutes, see where we close, and we'll frame, our buys there. But as of right now, I don't want to pick a side as of yet, but I basically gave you guys the two if-then statements. The first if is if we get a candle closure, a 30-minute candle closure below this 30-minute fair value gap, my draw would be pre-market lows, NFP data low, the higher time frame discount level, and maybe possibly August 13th low. My other if is if we don't get a 30-minute candle closure and we respect the consequent encroachment of this 30-minute fair value gap, and we create a bullish 4-hour and hourly power of 3, then I would like to see higher prices during this upcoming 2 hours, in the next 2 hours. But yeah, we'll see. As of right now, though, I do want to go over the pros and cons here with you guys. Some of the pros and cons from previous week. So the dollar actually just took out previous day high. That means that now the dollar is trading into a daily fair value gap. Be mindful of that, because that daily fair value gap should be respected if we are going to see lower prices on dollar. So now we're trading within that daily fair value gap, like I stated. So let's watch and see how we trade there. But yeah, we are in premium of this higher time frame price range. Let's see if we are in OTE. So we're really close to OTE, and there's a 4-hour fair value gap that's in OTE. So we'll see. There's 3 confluences that I can come up with for lower prices on the dollar. The monthly power of 3 is bearish. We are trading inside a daily SIBI. We traded into OTE of this higher time frame price range. So we should see lower prices on dollar. However, yeah, it depends. But we moved a significant amount of points during NFP. So on dollar at least. But yeah, back to the indices. Gave you guys both the if then statements. So just watch here. Just watch from here. So pros and cons from previous week. I can remember some of the pros here. I can remember after looking over them the past week is being really selective with the types of trades I take. So last week we expanded lower 2 days that last week, and I wasn't able to partake in that expansion lower because price moved really fast. So I waited for some sort of retracement. So if you guys take a look, usually if New York AM session expands a lot in one clear direction, the lunch session will provide either a retracement or some sort of just some sort of pullback. We tend to get a pullback. Sometimes we just sell off the whole day. But previous week we had both times on both days previous week we had a retracement during the lunch session, and I was able to wait patiently for that retracement into a fair value gap, a 15-minute fair value gap or hourly fair value gap. And yeah, that's just one of the pros that I was able to do. I didn't feel FOMO. I didn't try to rush into anything. I simply just waited till prices trades back into a premium array, and then if we had a bearish reaction to that premium PD array, then that's when I would take the lower time frame model. And yeah. And the second pro was, even though that specific day, August 28th, we were bearish, I was able to take a long because I understood that prices was trying to rebalance into a fair value gap. So we haven't rebalanced that fair value gap yet. So my objective was for prices to trade higher into the premium PD array, but that's all I held the trade for. I didn't hold it for previous week's high or anything like that. I understood objective, and I was able to really execute on it. So cons. Whenever I took one of those internal models, I was shorting, and on the higher time frame, on the 6-hour power of 3, the 6-hour power of 3 suggested lower prices. However, I failed to recognize that, and even though I took the internal model, I overlooked the fact that the internal model was in confluence with the higher time frame narrative. So higher time frame narrative here was, we traded back into a hourly SIBI when we were bearish, so we could get continuation lower. 6-hour also suggested lower, so I should have been able to hold for, hold runners for the higher time frame narrative at least. Second con is paying attention to the entry fair value gap. If that entry fair value gap should be treated as a breakaway gap, there should be no reason for me to even enter it. Or if we disrespect the entry fair value gap's consequent encroachment by getting a candle closure above it or below it, depending on if we're longing or shorting. But yeah, those are my pros and cons here. And time to get into the improvements. So trading normal size, I can do that coming into this week. I actually didn't trade I didn't trade Wednesday, Thursday, or even possibly if we don't get a model today, then I'm not gonna probably do anything today. But another improvement I could work on is understanding that if the lower time frame model is in confluence with the higher time frame narrative, then I should be able to hold runners for the higher time frame narrative, previous day low, or if we're expanding, then I should be able to ride that move or ride that expansion lower. So, and third one, being more selective with the trades. So majority of my trades I should be able to answer the question, why did we create that power of 3? Why did we create that bullish candle closure? Did we trade back into a 15-minute BISI? Did we trade back into a hourly BISI? Why did we create that power of 3? Second question I should be able to answer is, if that gap should be treated as a breakaway gap, why is it treating as a breakaway gap? Those are just some questions that I should be able to answer, and if I'm able to answer them, that makes my trades very, very high quality. And just being more selective with my trades, paying very close attention to SMT. Like here, I have the SMT chart pulled up. I notice how NQ is relatively closer to data low compared to ES and YM. So that's suggesting that NQ is actually more bearish than both these other indices here. And yeah, SMT, pay more attention to that. Don't be afraid to take a loss. Losses are inevitable. They're just a part of the process. Paying attention to the other time frames when taking a 15-minute model. Ask yourself, what is the other time frames suggesting this? So this goes back to lower time frame model is in confluence with higher time frame narrative. Understand what are all the other time frames suggesting? Higher prices, lower prices. If there's time frame alignment between the 15-minute model and the 6-hour narrative, then hey, hold for the higher time frame objectives. And yeah, majority of the trades I take must require time frame alignment, unless there's a model where I know why we created the 15-minute bearish candle or 15-minute bullish candle, if we retraced back into some sort of fair value gap. And last but not least, I'm not going to discriminate between fair value gaps. I remember this week on Tuesday, I didn't enter a model because the fair value gap simply was too small. It's about the motion of the ocean, not the size of the boat, something like that. But those are my pros and cons. I will be going over 2 A+ setups here with you guys. So if I can find 2 A+ setups, I'll go over it with you guys. So August 22nd, Thursday, market analysis, New York AM session. This is classified as an A+ setup. Random A+ setup here, but okay, I remember this trade. 30-minute, hourly. What are they both suggesting? Lower prices. So now on the 50-minute time frame, this initial 15-minute candle here, this one right here, that one isn't suggesting lower prices. It looks like if you watch, or like if you traded retail concepts, this would be considered a doji candle. It's indecisive. It's not clear if we're going to take out that candle's high or low. So I wait and I notice, okay, well, this 15-minute candle, this next 15-minute candle after I waited 15 minutes is bearish. And I failed to mention this in the picture, but we actually traded back into the low end of the RTH gap. So we actually gapped up today. We filled the gap, we closed below it, and we treated it as resistance. And so that means we know why we created that. We know why we created that bearish power of 3, that bearish 15-minute candle closure. So now we have. So first, like I said, the hourly and the 30-minute is aligned with each other. After I waited 15 minutes, we are now in alignment between the 50-minute, the 30-minute, and the hourly. So all 3 time frames are basically suggesting lower prices. So now I would go on to the lower time frames to find some sort of entry pattern, some sort of like, PD array to enter off of to target the 50-minute low and 30-minute low and hourly low. So here there's a 2-minute fair value gap. That price is never disrespected yet. And if you guys take a look, there is a breaker pattern. Swing high, swing low, higher high, and then lower low. This last down close candle could be seen as a breaker block. Prices trades back into that breaker block that's overlapping a 2-minute fair value gap. On the 1-minute time frame, I take my entry whenever prices trades up into it at 11:15, and then we take out the 15-minute low / 30-minute low, and then we have some standard deviations that I projected for higher or lower prices. And yeah, that is an example of an A+ setup. Time frame alignment. Why do we create that power of 30? Is there a lower time frame PD array? One thing as well, we are actually selling above the midnight open. So not only are we selling above the 11 o'clock open and 11:15 o'clock open, but we are also selling above the midnight opening price. This is a A+ setup. Now I do want to go back to the charts here and take a look at what we're doing. We have created, like I said, it's clear to me right now that we are going to attack those data lows. Wait, this is NQ. Why am I? Yes. NQ, here's NQ. 3-minute. So we opened up that 10, took out data lows here, and then the 4-minute. Yeah, there wasn't no entry pattern here actually. So like I said, closed below that 30-minute fair value gap, had a bearish 30-minute candle. This bearish 30-minute candle is in confluence with this 15-minute candle as well. So we have time frame alignment between the 15, the 30, and the hourly. Open up at 10, we take out data lows, and then let's see if we can take out pre-market lows and if we can trade back into the higher time frame discount level. ES, nowhere near data lows right now, so keep in mind there is a large SMT divergence right now between ES and NQ. But yeah, let's just see if we can get attack pre-market lows and higher time frame discount level. There was no entry pattern to get into that trade to target data lows. Simply, that was just a very just boom, like straight down type of move. I feel like there would have been a lot of people here that traded this model. This one right there. So they probably saw a reaction to this 5-minute fair value gap. Let's see on the 15-second time frame. This is like something that Justin Ryland would have done, to be honest. But like I said, it's not my model, so I'm not going to take it. But probably saw some sort of SMT divergence here. Saw this, market structure shift. Trade back into freaking, I don't know, this breaker block. But yeah, I'm not dissing the way he trades or anything like that. It's just that would have been, I feel like that's something that he would have taken. I feel like majority of people would have taken that too. But I don't know. Very, very clean delivery here. Sell side, you can see this as a market maker sell model here. Buy side of the curve, sell side of the curve. Notice how the sell side of the curve, a lot faster price movement. Boom. Very fast. Buy side of the curve. First, this macro here, 850 to 910, consolidation. Basically accumulated that entire macro. And then we began to, I'm sure we had SMT divergence between some of these highs here. And then straight down move. Very fast movement to deliver the sell side delivery. And very interesting. The 8-hour objective has yet to be accomplished. 4-hour, however, has been accomplished. No distractions, so I need to be off my phone here. I'm actually going to end the stream here at 9:15. I have somewhere to be at 10, and I have to leave the house at 9:30. So, if there's anybody even on, then I appreciate you guys' time. But let's see if we have any comments or any views as of right now. Let's see. And we have 2 viewers right now. 2 concurrent viewers. I don't know if you guys are... Oh, just 1 concurrent viewer. Let's see if there's anybody in the live chat. No chatters. All good. I mean, as long as you guys are listening, that is dope. So we still have 1 people watching right now. Nice. That's... my message is able to be heard by 1 person. That is improvement. But yeah, hopefully you found that insightful. Very, very, very interesting price delivery this week. Like I said, it has been a very, very interesting week. Tuesday, literally the day right after a bank holiday, we expanded, if I remember correctly, like 850 points. So we expanded, 730 points. Massive range. A day right after a bank holiday. And the following days, Wednesday, consolidation. Thursday, consolidation. Friday, it appears we're probably going to consolidate again. And thinking this in terms of power of 3, where would we like to close on the weekly candle? If you trade ICT, he teaches about the TGIF setup. So now we actually do have buy side liquidity here that's resting within the 0.2 to 0.3 of this dealing or of this candle here. So TGIF, you can't see it as a like always occurrence. It is a there should be a reason for prices to trade up higher. Is there, like, do we take out, is London highs or Asia's highs within that retracement level? Is there a reason for us to continue higher? Well, maybe we could take out the New York AM session during the lunch hour or the New York PM session, but there is a reason for us to continue or to go higher here to attack the New York AM session. But that is, I'm just saying that's just something that, you know, you could anticipate. Man, I should not be messaging this girl right now, bro. Stream. Oh, I was about to just start venting to y'all. That's crazy. I should not be talking. Alright, no distractions, no distractions. Gotta put the phone down, no more texting. Alright, let's go back to the 1 minute here. Let's see what we have. So here I like to I always like to note out the 10 o'clock open, because the 10 o'clock open to me is a very important price, opening price. Think about it. If ICT says that prices is fractal, right? And how he thinks that the midnight opening price is extremely important. Well, if prices is fractal, you can apply that way of thinking with you know, hourly opens, 4-hour opens, 6-hour opens, every single open that makes sense. You don't want to mark out every 1 minute open, because you're not trading a 1 minute model. 1 minute model is like, what time frame are you using as your entry pattern to trade a 1 minute model? Like a second charts, I don't know, but it depends on if you are a scalper. Like, so an intraday scalper, you can trade 15 minute models. That's what I do. Like 30 minute models, hourly models. So you can mark out, you know, the every hourly open, Sometimes, like I said, if you're a scalper, you can mark out even the every 15-minute interval. So every 15 minute, 30 minute, 45, and the 0 mark, you can mark out that opening price. And the idea is that you want to be a buyer below the open and a seller above the open. So let's just say that I'm bullish here. I want to get into a position that's actually below the 10 o'clock open. So we, if we're longing, right? But the model has to suggest that we're going higher. Here, there's no reason for us to continue higher yet. There's no displacement higher. There's no bullish candles on the higher time frame, at least. So the 15-minute time frame, there is no indication right now that we have a bullish, we're bullish. We are actually, like, there's no reason for us to be longing here. The only argument that you could take right now is there's this 1 minute fair value gap. Some people probably took the entry here, had their stop loss at that 1 minute fair value gap high. Maybe this, I don't know, this 958 candles high, because they're targeting pre-market lows maybe. And even if they use premium discount, then maybe they are targeting the discount level too. But yeah, you always want to be a seller above the open, a buyer below the open. Just something that you can keep in mind. But here, like, even though this 15-minute candle suggests is that we are trading lower, I always ask yourself, why do we create that 15-minute power of 3? There's no answer to that. We didn't trade back into a 15-minute fair value gap. We didn't trade back into an hourly fair value gap. But and there's no time frame alignment. It's only the 15-minute that suggests that. Well, I mean, the other time frames are, I guess, suggesting lower prices as well. But what I'm trying to say is, if I were to take this 15-minute model, it would need to be in confluence with the 30-minute time frame. So I want the 30-minute candle to close as well before I take a model, not just wait for the 15-minute. So yeah, we've taken out both data highs and data lows. It appears that we're attacking pre-market lows now. So I'll actually move that 1030 here. And let's pay attention to ES and Q. Like I said, ES nowhere near data lows yet. So there is still that SMT between the markets, but you're not going to take it long simply because of SMT. You want to see price willing to trade higher, but there's no willingness yet on ES, and there's no willingness on NQ. And yeah, simply wait and watch. So 8 seconds left. No, not really anything to do here now. So I'm actually gonna call it a day here. I've done basically everything I did want to do with you guys. Go over my improvements, pros and cons, and show you guys an A+ model. And with that, thank you guys so much.